Hello, credit union community. Welcome to this special live recording of Grow Your Credit Union at NACUSO Reimagine in Las Vegas. Here are the topics for today's show. First things first, we're going to tackle the recent termination of 2 NCUA board members and what this controversial move means for the future of credit union oversight. Next up, we'll explore the potential benefits of deregulation and how fewer restrictions might actually unlock stronger, more dynamic collaborations between credit unions and CUSOs. Then we're diving into tech investments, asking where credit unions should really focus their tech budgets right now. And finally, we will wrap up with practical advice on finding the right CUSO partner. Welcome to Grow Your Credit Union. This is the place where credit union leaders gather, learn, and grow. I am your host, Joshua Barclay. Please give a big round of applause for my co-host, Becky Reed.
Howdy, y'all.
I want to say something about Becky. Becky is the only person that does not ask me for the questions before a recording. But maybe I'm lying because James McBride also does not ask for the questions before the recording. Becky, you're good. Because it feels like we rehearse, but we do not. We don't rehearse. Becky, I want to start by saying NACUSO is the very first conference that I ever attended in 2021. I was introduced to a lot of you in the room, and I realized that this movement was friendly, inviting, and I've been a part of it ever since. And I have nothing but good things to say about this conference and the people that put it on. It is sort of my birthplace, if you will, for the credit union movement. All right, Becky, there's a lot to address after yesterday. But first, I want to bring on the Chief Strategy Officer at Credit Unions First, our special guest today, Mr. Dan Daggett. Please give him a little round of applause.
Hey, everyone. Good to see you.
Okay, so I think we all got the news yesterday morning, and it's been the talk of the conference so far. President Trump has fired 2 NCUA board members, raising concerns about political interference in financial regulation and the future of credit union oversight. Now that we've had 24 hours to process the news, folks, it's time to take a deep breath and kind of process our next move. Becky, I want to start with you. In your opinion, in the wake of this news, come Monday morning, what should credit union leaders say to their employees?
First of all, guys, do not panic. I'm seeing lots of things in the trades about existential threat. The organization has been decimated and they can no longer function. And that somehow the credit unions are going to go away because 2 board members at NCUA are no longer in their seats. That is the most ridiculous take that I have ever heard. Look, what credit unions do a lot of times, guys, when there's uncertainty, they pull back. They go, oh my gosh, what are the interest rates going to be next month? What are the regulations going to be next month? When is my exam going to happen? Is it going to change? And what happens a lot of times is they pause so long that they don't get anything done. They use things like this as an excuse to not make decisions and move forward. So I am going to challenge credit unions and the CUSOs that serve them that this time right now is a time of disruption. And it is not a time to pause, but instead is a time to double down. We have an opportunity to change how we do things. It is time to now put our money where our mouth is, and we need to advocate for a more modernized structure at NCUA. Certainly with only 1 board member, which is the chairman, Hoffman, right now, at NCUA, there's not going to be any rulemaking going on. But NCUA is not the only financial regulator this is happening at, by the way. We act like the sky is falling, it's the end of the world, and it's not. This is an opportunity, not a threat. So credit unions, on Monday, when you get back to your office, Please don't pause your strategic plans. Please don't stop talking to your vendors. Please don't stop signing contracts. Please don't stop moving forward.
Becky, I may double down on what those particular opportunities are that you're seeing, but first I need to go to Dan. Dan, what are your feelings? What are you telling your employees come Monday morning or today? We probably aren't waiting till Monday morning. What are we saying to them? Anything?
Well, the first thing I'm going to echo Becky's sentiment. Let's put the pedal to the metal and get some things done for our members. At the end of the day, the mission of the credit union hasn't changed. Our mission yesterday was to serve the member. Our mission today is to serve the member, and our mission tomorrow is to serve the member. And we need to maintain that focus, and we need to do whatever we can from an advocacy standpoint to broaden what we can do from a financial advocacy standpoint to improve not only what we can do as a credit union, but what we can do as CUSOs. And I think this is a real opportunity, and I hope that the board of NACUSO really doubles down and they really go after the opportunities of what we can do in a number of areas. Miriam did give me something to read. We were fortunate to have had in the room yesterday former NCUA board chairman Dennis Dollar. Before he left yesterday, he gave some thoughts to Miriam, and I'm just going to read this. So if it sounds like I'm reading, I am. Chairman Dollar said, "It's always been my understanding historically that a president cannot remove a Senate-confirmed board member before his or her term is up. That is what makes these boards independent. That said, I also was under the understanding that a sitting board member could not be renominated for a second term until the Biden administration reversed established precedent and renominated Mr. Harper for a second successive term a few years ago. So precedents have fallen now under both the Biden and Trump administrations. Will this make the regulatory agencies like NCUA less independent? Probably. Is that a good thing or a bad thing? I guess the last two presidents have proven that they want the regulatory agencies carrying the philosophies of the White House. Time will tell what approach wins out, but these are unprecedented actions that both Biden and Trump have taken. The result is, if they are sustained in court or if they are not, will unquestionably impact regulatory actions and the regulatory environment going forward."
There you go.
Dennis Dollar. Becky, I got to come back to you. I got to hold you accountable for what you said. You said there are opportunities right now, right, in the wake of this, right? I don't think many people are seeing those opportunities. Real quick to close this segment out, what specifically are these opportunities you speak of right now?
Well, one opportunity is there are not many de novo credit union charters that are happening right now. The system is broken. Any industry that does not have new entrants is a dying industry. And certainly we can look at the banking environment and we can look at the credit union environment and we can say, yes, there's consolidation. Yes, the number of financial institutions is shrinking on both sides. It's nowhere near what it was in the 1970s. However, on the banking side, guess what? New charters are happening. They are coming to be. New banks are being opened. I wouldn't say it's thriving. I wouldn't say it's happening at breakneck speed. But what I can say is it's not happening on the credit union side. And if we don't fix that, and frankly, I believe that is a systemic problem at our governing body, which is NCUA, we need to fix that. So our opportunity is to go to Washington, D.C. and ask Congress and ask NCUA to fix that.
Okay, so I don't know if any of you were in the room, but Rebecca Ryan's fire drill for the future was one of the best exercises that I think I have ever been through in any event in my life. And we got together as teams. Dan Daggett was at my table, and we built strategic foresight plans based on the NCUA news. And it got us imagining a world where there's sweeping deregulation, and CUSOs and credit unions can partner more freely with less regulation. So Dan, from your perspective, what doors could deregulation open for stronger, more impactful partnerships between CUSOs and credit unions?
So we were part of that group yesterday, and for those of you that participated or didn't participate, we were charged to look at three different items. What was the worst thing that could happen out of this, kind of what was in the middle, and then the visionary, what could, the opportunities be. And I was fortunate to be sitting with a group of really passionate leaders, and we talked about what could be, really swinging for the fences. a number of things came from this. We discussed, initially we could be part of the problem or we could be part of the solution, and we chose to really dig down and be part of the solution. First and foremost, one of the things that came out of it was for NACUSO to really be an advocate to increase what credit unions can invest in CUSOs. I mean, that's really what we can thrive with. And if those investments are made in areas that improve the lives of our members, maybe we can actually start to reverse the aging of our membership, and we can provide services that are really impactful for younger folks, and we can move the movement forward for years with those younger folks. But we got to be able to invest in those CUSOs to do so. The other piece, opening up field of membership, perhaps making it easy, as Becky's already alluded to, for new charters to start. There were just a lot of positive opportunities that came out, and we documented them. I actually took a little picture of the opportunities that we put together, because I think we can really build on those, but we have to do it cooperatively.
Becky, deregulation, what could that mean for the betterment of CUSO credit union partnerships?
Well, I think that, as I've mentioned many, many times, that collaboration is our superpower, right? And the superheroes in that equation are CUSOs. CUSOs are a very special entity. I'm going to say something just maybe a little bit controversial. Are you surprised?
Yeah, I'm shocked.
All right. Well, I think that what makes CUSOs special is the fact that they have to serve credit unions when they get a credit union investment. That is an important part of our ecosystem, and I think that that is something that needs to continue. Now, there are the rules around investing in CUSOs and the types of things that can be invested in, I think needs to expand. If any of you have looked at the Federal Credit Union Act recently to see the list of permissible activities that CUSOs can do, yeah, there's things like computer processing. Really? I mean, it's an antiquated list. It's from 1972 or something. I don't know. It's probably not that old. But we need to modernize. So deregulation is talking about getting rid of some of the burdensome regulations that kind of hamper innovation. But we also need to modernize that regulation as well. So it's not just cutting and getting rid of, it's also updating. An example, you just talked about expanding field of membership. Well, how about including digital communities? My son, growing up, would go on Discord and he would participate with a global community that all like to play a certain video game. Would you say they had a common bond? Perhaps? So I think not just getting rid of regulations, but modernizing existing ones is something we should take a look at.
Dan, when we're thinking about some of the most cumbersome regulations right now when it comes to CUSO credit union partnerships, I know you kind of mentioned a few. What do you think is maybe the most grotesque? I don't know if grotesque is the right word here, but let's use it.
One of the themes that came up yesterday, I'll harken back to our conversation yesterday because it was productive, was around the limits on commercial lending and how our CUSOs, if we're working collectively, we can expand what we can do as an individual credit union. But there was also, some discussions about the limits in terms of dollar amounts and the fact that there's a gap in between, let's say $200,000 and $1 million perhaps in what we can do, but collectively can we do that? And let's look at tearing down some of those restrictions in terms of what's considered a member business loan.
We've all seen a lot of technology at this conference, but with so many options out there, where should credit unions really focus their energy and budgets to provide the biggest impact for their members? From your perspective, Becky, if you could bet big on only one emerging technology right now, what would it be?
So you're asking me what one emerging technology that credit unions should focus on?
Yeah. With a limited budget. Let's say we're going to do the deserted island. This doesn't make sense, but we got one big investment that we can double down on right now. Where are we throwing our chips? We're in Vegas.
Okay, this is not a sales pitch for the organization I work for, but I believe very strongly in distributed ledger technology. It is going to be a game changer.
Real quick, Becky, you can go with this one, but I'm going to challenge you harder than I normally would. Go ahead.
Please do. Distributed ledger technology is a game changer, not just for the financial services industry, but actually for most industries. Distributed ledger technology is both the database layer. It's just a data storage system, basically, just like Oracle, but it's also a transaction layer. And it is already is revolutionizing payments, particularly global payments. Credit unions are payment facilitators, right? So your member has their checking account there so they can pay their bills, they can go shopping, they can do things. And I'm not talking about cryptocurrency specifically, but I am talking about the currencies that are called cryptocurrency, stablecoins in particular, that ride on a distributed ledger rail that revolutionize payments. So I think that credit unions should double down on looking at that. Many credit unions that we talk to have more than 5 different payment vendors. Some even have 10 or 15.
Ooh, that's pretty gross. Dan, we're throwing our chips down on a big tech investment. Where are we throwing those chips, my man?
From a credit union standpoint, having been a CEO of a small credit union, I've been there and faced that. And as a fiduciary of my members' money, I don't think I'm going to throw it into any one particular technology. I think I'm going to look at an organization working with somebody like Reseda or the Circle Collective, where my $2 million can be leveraged to make a $20 million investment, where I can look to who they've partnered with to be able to bring more benefit to a broader spectrum of my membership. I harken back 2 years ago to the first Reseda Summit, and Ben Maxim got up at the end of the event and mentioned over the past 18 months, the 20 investments that they had made came from a pool of over 450 fintechs. We as individual credit unions don't have the capacity to look at 450 fintechs and weed out who's the best. But we have organizations out there that we as leaders in the industry can look to and work with to find out what solutions are out there and make those strategic investments for the benefit of the cooperatives.
Becky, I'm coming back to you. Coming back to blockchain, calling you blockchain Becky.
Yeah.
So just talk to me really quickly about sort of just the biggest use cases. Now they're going to be obvious to you, but I'm going to ask like a numbskull because I hear blockchain this and blockchain that, and it's like, okay, what's the real benefit for the member here? Like, give me the real world scenario.
Certainly. At the end of the day, it really doesn't matter what the underlying technology is. It matters what the member's experience is. So it doesn't matter whether a payment is moving on a blockchain rail or a real-time payments rail or ACH or whatever the case may be. At the end of the day, it's about what the member experiences. And so I'm going to give you a quick use case, right? We are working with, there are a lot of credit unions here in the United States that have a particular field of membership, like Ukrainian or Polish, or there's an ethnic component to their field of membership. And in Ukraine specifically, but also in other parts of the world, in Africa and Latin America, getting payments to people, getting money to people is a real challenge. International wires are expensive and clunky and full of lots of different steps. It's expensive for the financial institution. It's expensive for the member. And the person on the other end many times has to put their own lives in danger in order to pick that money up. With distributed ledger technology, you can send a stable coin from here to there in real time, and they can spend it to buy groceries. Doesn't matter that they're using blockchain on the end. At the end of the day, it's benefiting mom who needs to buy milk.
All right, we're at NACUSO. We all know that there's power in this partnership between CUSOs and credit unions, but aligning visions and values isn't always straightforward. So let's get very practical here, Dan. Beyond the obvious, Dan, what is one question credit unions should always ask before saying yes to a CUSO partnership?
Well, here's a shameless plug for our podcast, Members First Mindset. The name of that podcast is very deliberate because when I was a CEO and even now as CSO of the CUSO, we're always asking ourselves, what's the benefit or the detriment to the member on any product or program we're looking at? So I was hired by a board of directors who were elected by the members to serve them and to provide services that best elevates the majority of them. So keeping the members first, the mindset of how we're impacting the members, I think should be the first question we ask for each thing that we're looking at, any of those investments. And I think we all have to hold ourselves accountable to make certain that we are making the decision that is in the best interest of the members. Oftentimes, I see folks making decisions that, in my opinion, aren't in the best interest of the member. But that's, everyone has to hold themselves accountable for what they believe to be true, and impactful not only from a broad membership standpoint, but also from a financial standpoint for the bottom line of the credit union.
Keeping the member first is not very controversial, Dan. Thank you for adding that to the show.
It's not very controversial, but there are a lot of folks in the industry that I don't see doing it.
Let's move over to Becky. Becky, we're asking our CUSO partner one question. We've got a contract in front of us, and we're about to make the deal. What is one question that I should be asking my CUSO partner before anything goes down?
Can you give me a better price? I mean, look, this is what I see a lot of times. There are fintechs that come into the space, some of whom have accepted a credit union investment and are therefore CUSOs, and their pricing, frankly, is ridiculous. Okay? Ridiculous. It is unaffordable for a credit union sub $100 million to afford many new digital banking platforms. That is a travesty. That is a travesty. That is not making sure that they're looking out for the end user, which is the member. There are a lot of fintechs, frankly, that will not even sell to a $150 million credit union. They focus exclusively on billion-dollar credit unions and up. That is also a travesty. There are lots of things that you guys can do. You guys, as credit unions, need to understand the power that you have. You can negotiate your price. There are lots of things that you can do. You can pilot new programs. Maybe there is something that the CUSO wants to do. They don't have a credit union partner in order to do it. And you can negotiate favorable terms in pricing in order to be that pilot partner for them. We don't ask enough questions. We tend to look at what's given to us, the contract, we don't read it. We don't get legal guidance a lot of times because we're strapped for resources. I'm speaking at the small credit union size a little bit, and we don't negotiate. So the first thing I would ask is this your best price? Do you really want me to be your customer?
Becky, dig into that a little bit more when we're talking about pricing. So essentially, CUSOs will come with outrageous price tags, price out the smaller credit unions, sub 100 million, sub 150, whatever, and just immediately go to the top of the chain, making their first phone call to Navy Fed. So is that a pretty typical story?
It's interestingly enough, new entrants into the space, new service providers that want to provide services to credit unions. Yes, that is what they do. But the thing is 80% of all credit unions in the United States are under $250 million. If you are a fintech, whether you're a CUSO or not, and you want to serve this space, you are limiting yourself by not focusing on the credit unions under $250 million.
Well said. Dan, you looked at me, gave me the eye. You want to step in? Come on.
Yeah, I did give you the eye. Becky's, chatting about contracts and pricing, et cetera. The other day we sponsored lunch and we put some challenging questions on the tables to hopefully spur some conversations. And one of those questions was, in the C-suite, when you have a new contract or even you're renewing a contract, do you simply give it to legal to review to make sure in a legal context there's no catch there or anything? That's probably what you do when you stop and then you sign it. How about giving that contract to your CFO and have them do an analysis on the financial impact of that contract? I think if you actually did that, you'd find there are quite a few pitfalls in some of those contracts that are detrimental to you. Like, we signed a 3-year contract and we want to get out in 2 years. What are we going to have to pay to get out of that contract? How's that going to impact us? Because there's something better for us to move forward to. So I challenge folks in the room to ask your CFO to review your contracts as well.
All right, we got a good one here from our man, James McBride. He's been on the show multiple times. He's one of my favorite guests. His question, he is the CEO of Connects Credit Union among his CUSO. Not sure his CUSO's name. Sorry about that one. CU Evolution is up in this hizzy. Okay, Let's address this question. He says, if you eliminate the panic from the NCUA announcement, what do you think will actually happen in the short term if the NCUA is consolidated to the Treasury or FDIC? And also, what about long term? What are the implications? Short term, long term? Becky, starting with you.
Do I personally think that it is in the best interest of financial cooperatives to be regulated by for-profit governing agencies? No, I don't. I do believe that credit unions are special because of our cooperative model, meaning the members own us. However, from a member perspective, we kind of look the same as a bank, right? We have checking accounts, we have credit cards, we have loans, we have those kinds of things. I think that the fervor around the fact that the OCC or the FDIC couldn't possibly understand what a financial cooperative does and couldn't ever possibly regulate them fairly, I think is short-sighted. So look, necessity is the mother of invention, guys. And if that happens, we will figure it out. We will be okay. We will survive. We will move forward. And so again, I'm going to double down on this time of disruption is a time for us to rise up. Let's get uncomfortable. Let's ask ourselves the hard questions, and let's do the difficult work to make sure that this industry continues to remain member owned.
Beautifully said, Becky. Dan.
For those out there that are fearful, I think that's misguided. I think we need to convert that fear into energy. We need to be focused, as Becky stated. And some of us have been around long enough to remember the grassroots effort back in 98 during HR 1151, when we did coalesce as a movement, and we have that ability to do it again. And I think I'm optimistic, that we've got some groups out there, NACUSO, the Circle Collective. We've got some brilliant minds in this industry, and if we just apply those to where they need to be, let's make this an opportunity. There's definitely some uncertainty out there about where things are going to go. It could be tomorrow. There are 2 new appointments for board members. There's a lot of unforeseen things there. But let's have our wish list. Let's put that together and let's focus on that.
Nice, Dan. All right, Becky, I think the audience is teaming up on you, to be honest with you, trying to give you the blockchain backslap here. Let's take a question. Blockchain transactions, they say. Even stable coins can take a long time to settle. Who should float the transaction when our member uses stablecoin at a gas pump? We're not going to make them wait, are we? Becky?
I'd like to see the use case where a stablecoin takes a long time to settle, because if you're comparing stablecoins to Bitcoin, it's not the same thing. Stablecoins settle instantly, immediately, and can absolutely be used at the point of sale in order to purchase things. No different than the ACH or the Visa or MasterCard point of sale rails. So I'm going to push back, and if you want to talk to me later about a stablecoin settlement, we can, but there's no delay.
There's no delay, folks. Don't get into it with her. No, do it. Get after the show. Get in her face and say, what's going on at the gas pump if they use
Bitcoin does have delays, to settle, and it can take 15 minutes or longer.
Okay.
That's true.
Okay. Dan, some of this is like Klingon to me. Do you even want to attempt to jump in on that one?
The chain I'm most familiar with is the one from my anchor to my rope that connects to my canoe.
Okay.
So, no.
He's from Maine. He's going to stick with his canoes and his ropes. I don't blame you, Dan. I'm also from New England. I will stick with that as well. Okay, Becky, let's wrap the show up with final thoughts. Anything swimming around in your noggin right now, based on anything we've discussed today, I want you to shoot for the moon.
Keep moving forward. Guys, this is not the time to huddle in the corner and wait for the storm to pass us over. This is a time to get in Dan's canoe and move forward. So one of the things that my partner at Bank Social, John Wingate, and I talk about all the time is, do you guys remember the Forrest Gump shrimp boat scenario, right? Where he and Lieutenant Dan went out and didn't realize there was going to be a hurricane. They went out, and you know what? They went through hell, but they survived the storm. And at the end of the day, they were the last boat standing. So credit unions, let's weather this storm and be the last boat standing.
I think they came back with a lot of shrimp Maybe that's the wrong scene. I'm
They
not
didn't
sure.
come back with a lot of shrimp right afterwards, but they got a lot of shrimp after because every other shrimp boat had been destroyed by the hurricane.
But Jenny was back on the dock too at that
She
time.
was,
She was.
at
So there
some
was
point, yes.
there was a
Yeah.
good. I'm trying to sum this up. It was positive, folks. They did go through a storm. They did not get the shrimp, but something.
Eventually, they did get all the shrimp. So yes,
That's true. That's true. Bubba Gump is alive to this day. I think
Correct.
I think it's on the strip. In fact,
yeah, it's in several places.
Dan, anything that you want to throw out there before we end the show?
I'd just like to say we all think about where we were during certain events in our lives. And I'm thinking it's an honor that when 2 NCUA board members were fired, we were all here together at NACUSO. And we have this energy to put together. So let's remember where we all were. We were together. And let's move this industry forward together.
Beautifully said, Dan. I know that it's still early, but can we get a golf clap to end the show? Please, folks, can we get a little bit of a golf clap? That's better than a golf. Oh, we got one man standing. Okay. Thank you, James. I want to thank you all. I want to thank NACUSO for having us here. And remember, if you like the show, we're on our podcast players, all of them. We're called Grow Your Credit Union. We have news updated on our website all the time. It's called growyourcreditunion.com. If you want to be a guest or you want to talk about being a sponsor, head over to growyourcreditunion.com to learn more. Thank you all and take care and bye-bye.